Alrighty, so let's take a look at what I deem to be, pretty damn high probable scenarios for us to look to get involved with. So we can clearly see that the 4-hour chart is bullish. We've had a very, very overextended run to the upside. So we're going to look to see if we can start to play that swing pullback. Now, if we zoom in a little bit, what can we see to give us confidence that the momentum isn't going to continue to the upside and we're actually ready to move to the downside? Well, this high on the 4H here caused a 4-hour bearish change of character, which means we have somewhat of a strong 4-hour high that has now been liquidated. So we've had that strong liquidation, which we know can help increase the probability that a swing pullback is ready to start, because potentially institutions have used the buy side liquidity behind that high in order to position themselves short. But what's better and even greater confirmation of that is we're starting to see kind of those first signs of bearish eye bosses, right? We're starting to see that structure shift, candle closes below the low, bigger bearish body candles are starting to kick in, right? These candles, you can start to see that bearish momentum kicking in. Okay, starting to see bearish order flow being respected with the fractal order flow there. And now we have this 4-hour supply zone here. So when I see price action like this, especially if it's lined up with the M15, I get pretty excited to want to get involved, right? Nice big overextended run. There's nothing of any real significance in this leg in terms of opposing key levels for us to short against, right? There's no like structural low here where price can sweep liquidity and push back up. There's no significant demand here, right? A lot of room and risk to reward, almost like a vacuum in price for us to target to the downside. So when I see this, I really like it. Obviously, we can get chopped up a little bit when you try and get in early shorts, but when you've got the strong liquidation, starting to move down, starting to see clear bearish order flow, for me, that is go time, especially when you see it clear on the M15, right? Where we have shifted bearish here on the swing structure. We've then had another bearish boss really to confirm that, because now we have both a confirmed lower low and a confirmed lower high. We have this 4-hour supply here. So in an ideal world, I would love to get short from this extreme M15 supply zone, right? Kind of like that phase B trade we looked at in the medium probability examples, where we could look to see if we get that strong liquidation into this extreme. But we know that price doesn't have to move up that high. We do have a liquidation of this M15 lid to the left. So let's draw that on. But so far, if we identify the M15 PBL, right, the demand that liquidated that lid to the left, we've had a mitigation, okay? Now that PBL has been tapped, but it hasn't made a higher high yet. So let's just play price a little bit forward into session open and just see what we can work with. So as Frankfurt pushes in around 6:30, we then get that PBL fail, okay? So this is then where you want to be on the ball and going right. Because this is kind of a mistake I see sometimes a lot in the community. It's completely understandable. I'm not having to go at anyone here. It's just something to like be aware of. Is we can do our pre-session analysis and we're like, right, we've kind of had a decent amount of momentum. We're correcting. Like at this point here, I'd probably be thinking, yeah, there's a decent probability price is probably going to push up another leg, just with the way it's looking. Potentially get a mitigation into this level, right? And then I'll look for the shorts. Or of course, you could then wait for the bearish eye boss, then look for the pullback, right? Something like that. That's what I'd be thinking at that point. But then when you start to see sort of this happen, where we've come into the PBL flip, we've pushed up, we've failed to put in a higher high, zoom in a bit, right? And then we're starting to come down with bigger momentum, right? Big sort of strong bearish close like that. So the PBL has failed. We've got a bearish change of character. We've swept liquidity to the left. We're within 4-hour supply. But again, it's the higher time frames are prime for me. I want to be thinking a little bit more aggressively of just like, right, I'm willing to start to look for shorts within here. And if I'm wrong and this is just an internal pullback to go higher, then I'll look for the short here, right? These are the areas in which it's like, I'm not going to wait for everything to be absolutely perfect when this is looking pretty decent already. So in this scenario, the M15 supply is a little bit messy because it's kind of a bit of a corrective range and then we push down. So you can kind of do it one or two ways. Just focus on this most recent pivot supply here, right, where clearly that momentum came in and caused, or you could be a little bit less refined and take from the bottom of the reaction to the top of the reaction, and you're essentially just taking that whole flip range there, right? Either way is valid, okay? So as we start to come into session open, let's see if we can potentially get that M5 entry. So we push down, okay? Now we have had a slight mitigation here, that is true, but if we look on the M15, okay, we haven't actually had a mitigate. We've just tapped the edge of the range, but we haven't quite mitigated into our refined pivot supply. Okay, it's more just like one kind of straight leg here. It's not like we initiated out, had a pull back in, and then we go. Okay, so I know that can be a bit confusing with sort of what is a true mitigation or not. Sometimes you have to read between the lines a little bit, but when you kind of just see one straight leg, right, it's just one fractal leg to the downside, it's in a high value area. If price comes back in and gives me my confirmations, I am more than willing to then look for the movement, look for a move within there, okay? Excuse me. So now we can look to see if we're going to build that fake break in the price action to the right. But of course, what do we need to see first? We need to see our POI mitigation. Now we get it, okay? Now we have our POI mitigation. Do we have a strong liquidation that we can work with? Well, what did this high do? This high did not break any structure. This high did break the structure. So we got an M5 chock there, which then means that this is an M5 strong liquidation here. There we go. The PBL is all the way down here. That clearly has not been mitigated and made a higher high. So that means that, you know, this trade idea is still valid. Like we have an active PBL, so we can look to get involved. We've now had the mitigation, we've had the strong liquidation. So sell stop below the low of that candle. Okay, we'll talk about stop loss buffers in like I keep saying in this upcoming statistics video, where I'll talk to you about how you can approach that. And yeah, let's see if we get tagged to the trade on this candle. Yes, we do. So now we're in the position, just target our fix 3R, and we start to move along. Now, depending on your management strategy, depending on your risk tolerance, you may want to also consider getting into potential scale-ins, you know, depending on whether or not, you know, how you want to approach already being in a position. Okay, it's going to be down to you, but I just want to show you another potential opportunity, whether you missed that one or whether you wanted to scale in, right? Don't just sit in your lower time frame. The moment something's playing out, medium time frame is what you want to be focusing on. So now we have like a clear bearish IBOS to the downside. The momentum is clearly coming in, you know, with London. It's go time now to try and target this low and potentially beyond that, right? For some of you, you don't have to do this fixed 3R stuff. You can, if you've got the skill and the experience and you know, in these certain things that will happen a few times a year, these certain scenarios, a few times a year, maybe like once or twice a quarter, where everything's aligning, good risk reward on your side. Don't be afraid to potentially, you know, allow yourself within your trade plan to have bigger technical targets. Okay, we just recommend fixed targets to get you going, to get you consistent, to help with your psychology, to help trust your back testing results, right? So you have a consistent method. But yeah, for those of you who are more experienced or will be more experienced in the future, do not be afraid to trust yourself in certain environments to try and push them a little bit further, because if you catch 1 to 5 trades a year that are, you know, 10R, 15R, maybe 20R, not saying it's easy or psychologically easy, that's going to have a big boost, that kind of little mini quantum leaps. Mini quantum, I know that's a bit of an oxymoron, but you know, do you know what I'm trying to say? Where it can really boost your account. So yeah, if you do feel like you're in this and you're positioned well, do consider potentially doing that, but just don't do it all the time. Don't be swinging for the fences when the technicals do not justify it. So anyway, we have a bearish IBOS. We now have another clear M15 supply zone, right? Whether you want to refine it to the pivot or the larger buy to sell, that is up to you. So now we can look to see if we get that fake break going once we have our mitigation, right? So we pull back in, we get our mitigation, no strong liquidation yet. This high here has not broken any structure, so that will not be a strong liquidation if that high goes. Okay, we need a high that breaks a low. Okay, we coming in. Okay, now we get a bearish M5 change of character. Okay, this high breaks the low. So now potentially we can get a fake break. Where's our, there we go. Cool, so set your alert on there. Maybe we'll pull back, maybe it won't. Okay, ding, 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 alert goes off. We have our strong liquidation. I'm just going to rein this in for a minute. Obviously, this trade is still running, depending on how wide your stop loss was. Otherwise, you might be out if it's a bit tighter. So now we have our liquidation. Really nice corrective pullback. Really high probable trade because of the higher time frames, not because of the entry model, right? It's the higher time frames, the medium time frame that makes a trade's probability high or not, in my opinion. So yeah, pip or two, whatever. Well, again, I'll talk about how to be a bit more scientific with this later, and I'll keep repeating myself, but we will get into that. Okay, and let's just say, we do another target, but you're well within your rights if you want to target further with these trades. So we either get tagged in, or if it pushes up higher, we will cancel the order. Okay, we're tagged in, really good start to the trade. But yeah, with this management, I'm not trading to break even, we just sell, forget. And there we go. So yeah, in my opinion, two what I deem to be pretty damn high probable trades. Like, it's aligned with the 4-hour chart, obviously aligned with M15. We've pulled back up, we've liquidated this high, we've had the PBL fail and flip. There's an initial trade within there. POI selection is a little bit, it's not the cleanest of POIs, but this one, if you were umming and ahhing about the first one, this one, no one should be missing this trade. Once you understand all of our rules, these are trades that, we've got to be capitalizing on. Like, put your foot on the gas. Do not be afraid of taking a loss here. This is go time, as I keep saying. And then, yeah, whether you want to just be religious with the fixed hour targets is up to you. But when we have this environment, like on the 4-hour chart, it's not something I'm very good at. I'm terrible at holding trades. My personality is to just be in and out. But these are the environments I try to remind myself of every year. When this happens, don't be afraid to give a bit of profits, back on the table if it ends up doing this or something, whatever. But these can be the ones where suddenly when it goes, there's nothing here and it just ends up absolutely tanking. But yeah, you don't want to be swinging for the fences with every trade. As we can see, we end up getting a pretty big bearish move. So what I'm actually going to do is just bring this to the next session, because it's kind of just an interesting scenario to talk about before we wrap it up and dive into the statistics. So just bring this around here. So if we kind of follow this on, super quickly drawing some structure, we obviously had another M15 boss. And after a boss, we can expect a pullback. But when momentum is strong, when I keep saying on the higher time frames, there's nothing really to support price, the odds of us now getting a very deep pullback are slim. So this is when, if we go back to the phases, and let's have the bearish scenario, this is when phase A2, right? So when we're like trading, down here, whoops, we've had a bit of an internal pullback and maybe there's some supply here. You can view this as like phase A2, right after the boss. This is when this can be on that higher end of the medium probability. Maybe some of you want to say it's high probability. I struggle to call A2 ever, super high probability, just because you're not selling in a very well priced area, right? I'm always expecting that deeper pullback. But for me, it's on the higher end of medium probability. So I very rarely really want to trade A2. But this would be the sort of scenario where I'm like, yeah, no, do you know what? I don't care. We have a deeper pullback. I'm willing to be a bit more aggressive here and get involved, right? So we've got this M15 supply range to the left. Okay, nice corrective pullback overall. How do we know markets move? It's kind of what you learn day one on baby pips. Impulse, correction, impulse. It's just to find that we could likely see another leg from here. If we push up higher, so be it. But I'm wanting to look to get involved, right? So we're already kind of within the supply range. It's up to you if you want to be over refined or not. So let's jump down. What time is it? It's okay. Frankfurt's open, so we have our session open. So I've actually jumped the gun a little bit here, because if you take the supply range rather than the pivot, we do already have our mitigation, and we have this high here that has not been swept yet, right? That obviously broke some lows and we've got some nice equal highs to back it up. But yeah, we're not just trading equal highs on its own. It needs to be a fake break, okay, with this new entry model refinement. So here we go, just in the interest of not being lazy and drawing out. That high obviously clearly breaks structure. So this is where we would set our alerts on there and wait for a liquidation. Okay, boom, alert goes off, liquidation. We've obviously had the POI mitigation. If you want to get involved, technically this is the start of your first, time where you can set a sell stop order to potentially get tagged in. Now, if you want to get that kind of 3.3R to the low, it's up to you whether or not you view the risk to reward as there. I would say most times price is probably going to push a little bit past the low anyway, so don't be too afraid of if your exact target can't get below it. See how you get on with the testing. But obviously in this scenario as well, what are we expecting? We're expecting a lot further downside. So this is where you're like happy to have kind of, not getting a full target before the low anyway. So let's take a look and see if you did it this way. All right, you don't need to stop to be here. Give it a bit of room. Again, we'll talk about how you can make that exactly mechanical, so you're not using too much discretion on the buffer you want to use. So this is a good example, right? Because we have our sell stop below the entry candle, the liquidation candle. I don't know what we're going to call it yet, but whatever. We get the next candle. Now, this candle doesn't break the high, so we don't need to cancel it. But we also don't get tagged in. So when that happens, you just leave the order. Nothing needs to change, okay? Next candle, okay, that tags us in, so now we're in the trade. Let's see what happens next. And then we push up. Now, depending on how tight your stop loss was, you may have been stopped out. So, let's just say we got stopped out, okay? We take a loss. No problem, right? I think that's a decent area that's worth getting stopped out on. You take the loss, lick your wounds. It is what it is. Now, this is key, right? don't just get annoyed and don't look at price action. As long as you haven't hit your, your risk limits for the day, whatever you set those in your trade plan, just save this down for later, journal it later, take your screenshots, do what you need to do, but be on the ball. What do we have? We have an M5 change of character here. It's a bit subtle, but let me just double check that. 370, and the low of that is 369. So it's about 0.1 pips, so a little bit harder to see, but it is there. And now we have another strong liquidation of this high. So now we can enter on this candle here. So again, depends on what buffers you use, right? And then here we go. Exact same idea. 2 inside bars, so nothing to do. Didn't push up, so we can leave the order on. Let's see what happens next. We come down, and then we get tagged into the trade. See how it goes, and there we go. Start to push down, come back up again, and let's just hold it down, speed this up. Pretty slow, but then eventually we go, okay? And it would have hit your target if you've got that 3 target there, okay? So if you had a bit of a wider stop loss, you probably would have been able to ride out that first initial trade. If you got choked out, not to worry. Try and be on the ball and see if we've got another one there. There's your liquidation. Few inside bars. We eventually got tagged in around 750. And there we go. So yeah, typically I'm not a big fan of the A2 trades, and I would advise literally just don't trade them until you are consistent. Try and be disciplined and not. But if we get in an environment like this is kind of when I'm a bit more willing personally to look to trade those. So yeah, I hope that kind of series of breaking them down into low, medium, and high probability was helpful rather than kind of just doing random examples. It's really good to kind of reiterate this theory with the phases cheat sheet. It's not completely foolproof, because obviously every scenario is quite different. There's always variables you need to take into account. And like I said, that is probably the hardest part of the strategy, is getting the experience to know what to pay attention to when to weigh them all up in your mind and when to get involved. But I promise you it does come with time, and this cheat sheet hopefully can be extremely helpful of a way to think about it. And obviously also what will be helpful is when you do your data collection through your backtesting and also your live trading, is to have a column in your spreadsheet or Notion, whatever you use, and to label these categories. And you may want to build your own categories. You may want to make even more categories there with more filters, whatever. And it will just really help you to zoom out in the long run and see, what stats work for you. And that is how you build your own trade plan. That is how you build your own confidence. And that is ultimately how you become an independent and consistently profitable trader, right? It's not like a cliche little phrase we throw out there. That is our ultimate goal with Photon, with you guys. We want to show you the way that we do our things. We want to teach you with the way that we think is most effective, but ultimately you will get that long-term consistency when you grab the stuff that we give you that you resonate with, you disregard and get rid of the stuff that you don't really agree with or doesn't work with your personality, and eventually over time you will mold something that will work for you. But to be fair, it's a never-ending process. We're doing it ourselves. We're bringing you on that journey, and this new module is a perfect example of that. So before I keep rambling, let's dive into the following lessons, which I believe probably will be the statistics.